name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. Today, I am joined by Mert Guler. He is with a company called Purves Redmond, an insurance-based company focused on public companies and the insurance requirements that they need to meet their corporate governance. Mert, thank you so much for joining me today.
Thanks, Anna. Thanks for having me.
So why don't we start off, tell us about yourself and tell us about Purves Redmond. Let's start there.
Sure. Well, I'm a partner at Purves Redmond. I'm based in Toronto, and we look at challenging risks in challenging industries, and we've got a lot of alignment with the CSE. One of our largest areas is mining and junior mining, and one of the areas that I'm focused on is innovation and what we call emerging risks. That's cannabis and all sorts of technology, including crypto, blockchain, esports, and now we're also doing a lot in the psychedelic world and getting involved in psychedelics.
Okay, so tell us about why would a public company need insurance? What areas of a public company would they want to think about insurance?
So really good question. We're involved. So those industries that I just mentioned, we really want to be like a really good risk advisor. We want to be an advisor to the board, an advisor to management, and helping in terms of keeping your risks down and insurance as well. Our focus is challenging industries with tough risk profiles. Like I said, for the kind of conversation today, we're probably looking more at the risks faced by boards as opposed to operational risks in cannabis or technology or crypto or something like that. And from the board perspective, directors and officers face a host of legal liabilities for Canadian corporations, statutory liabilities where directors and officers can be personally liable in the event of certain situations, including insolvency or bankruptcy. And there's a number of lawsuits and risk exposures corporately as well that could hurt the balance sheet that you can protect yourself, both mitigate your risks and protect yourself through insurance. And it's our job to advise on all those things for all the main industries that the CSE is involved in.
So I think that brings up a really good point. So let's take it a step back for 1 second. So directors and officers of a public company are your board of directors, and I think if I remember correctly, you need at least 3. One needs to be independent, which means it's not also an officer of a company. And then your officers of a company would be your CEO, your CFO, your corporate secretary, which are your minimum requirements. So that is kind of the group of people that will run or required to run a public company. And they are responsible, and tell me if I've missed something, but they're responsible for reviewing financials, the MD&A, for transactions, for the treasury. So the money that's in the company, they're responsible for how that's being spent, use of proceeds, raising the capital. So they have big responsibilities on them. And I know that some of the smaller companies, quite often these directors and officers aren't necessarily paid even wages. They're kind of there as an investor and a director, and they come with a large amount of experience. So that being said, with this amount of, a big weight of responsibility on them to manage that company, this is where insurance becomes, I think, crucial for a lot of these companies. I want to chat a little bit about varying sectors, because obviously this insurance plays a different role in varying sectors, but I think it's a really important conversation to have now based on what we've seen in the cannabis sector, what we've seen in the tech sector. Why don't we start off with cannabis? How has insurance affected the cannabis space, and why is it relevant and important?
It is, so kind of focusing on that directors and officers and board level risk and board level insurance. This is probably the most difficult and unprecedented time to be looking at directors and officers insurance, probably ever, since the product started. I've been in the business for 20 years. Insurance business, and I don't think anyone is. No one's seen anything like this before. Particularly bad in cannabis, but it's in every sector. Litigation's really been increasing in general. Litigation against directors and officers and securities class actions has been increasing. So the stat that we use is that the number of lawsuits has doubled since 2014. in general, in the courts in general, in all industries. And the average settlement has also doubled.
Wow.
Since 2014. So both the number of suits or the likelihood that you're going to get sued and the average damages have both doubled since 2014. So because many of these are insured, the insurance companies know this and they know what's happening and they're getting hit and they're paying claims and they're also aware of the trends. But then, and so it's been already a difficult market for probably more than a year. But then COVID hit. And with COVID, insurance companies are really concerned about the future. No one knows what's going to happen tomorrow. There's stock market volatility, the economy's in recession. This is US and Canadian and global. So basically insurance companies are hunkering down. They're really hunkering down for the long haul. They want to survive. They need to survive. And from an insurance company's perspective, they need to be in a position to pay the claim, you incurred yesterday or that he or she might incur tomorrow. So they're required and regulated to have a strong balance sheet and be around for a long period of time. So they're really hunkering down. They're not looking to grow. They're not looking to expand into new markets. And so they're really focused on portfolio risk management. So this means increasing rates, increasing their deductibles, being more stringent on who they'll underwrite, not renewing people or I shouldn't say people, companies that they don't want to be taking the risk on, and reducing coverage. So they're doing all sorts of things to mitigate their risks, which is very, very difficult for CSE's issuers and for all the executives out there.
Yeah, it's a little nerve-wracking, huh?
It's nerve-wracking, and cannabis in particular is in a tough spot because there's a real spike in securities class actions last couple of years, especially last year and at the beginning of this year. So it's already, underwriters are watching it, and there's very few insurance companies that do insurance for cannabis. Like there's like a handful in Canada and a little more than a handful in the States.
I was just going to ask, we have so many issuers in the cannabis sector that are down in the US. Is there a different, do you find a Canadian insurer if you're a US focused company because you're public in Canada? How does that work?
That's a very good question, Anna. Basically, the main rule there is where is your head office domiciled. So if you are a Canadian head office domiciled on the CSE, you're probably going to be looking at Canadian insurers. If you're a US domiciled, you're probably looking at US insurers, generally speaking.
Right.
And we have to be very active on both sides of the border and around the world. We insure actually 5.5 million square feet of cannabis production space across North America, in 20 states and throughout Canada. And we have cannabis clients in other countries as well, Israel, South America, Colombia, through our global networks. So we have to know what the board is talking about and thinking about and looking at in general. And unfortunately, we get calls, like we're literally getting calls, like 2 calls a week, a lot from CSE issuers, cannabis, tech, esports, blockchain, crypto, saying, we can't get insurance, we're getting non-renewed, basically the 2 things, right? And in particular, unfortunately, to compound the problem, 2 of the major Canadian insurers that really supported the Canadian companies in cannabis and crypto and blockchain and esports pulled out. 2 major players pulled out, and these were 2 really good companies that supported small cap to mid-sized Canadian companies. Perfect for the CSE. I don't have the statistic, but probably they would insure a good chunk of the CSE. They pulled out of all those sectors due to mergers and acquisitions. So we are getting a number of calls.
Why is Purves Redmond taking a different approach to this? Why are you guys still, kind of leading the force in the small cap space then?
Well, that's a good question. We're a brokerage, so we're the middleman. So we're not the insurance company. Like in those cases, those insurance companies pulled out. We're the middleman. But we want to learn. We want to learn something new. So people might call me this old dog, and this old dog wants to learn new tricks. And our whole team is full of people that when the D&O market, directors and officers insurance market, goes to absolute south, or when you talk about all the cross-border and state and issues with cannabis, or when you try to wrap your head around something like a cryptocurrency exchange, which I'm trying to wrap my head around, or psychedelics. Some people run away from that. We run in. That excites us. That gets our juices flowing, and we want to learn about those risks. I've been doing this for 20 years. So I started working with junior mining and then operational mining, and then got into small tech, small cap tech, and then large cap tech and international tech. Been involved in a number of different industries, manufacturing. And so risk and insurance for every industry is different, but it's generally the same principles.
Right.
Yeah, and I think of it like a sound mixing board with a lot of knobs and dials. Every industry has different knobs and dials, but they're the same knobs and dials. It's that one has a higher products liability exposure, one has a higher corporate governance exposure or international exposure, and some have lower of those risks. So with all that background from all these different industries, our whole team, which focuses on complex, challenging sectors, our whole team is set up to learn a new sector, understand the risks, and then take the sort of insurance and risk management principles we've learned in general and apply them to new industries, including whether that's esports, and we just concluded an esports deal with the CSE issuer that got non-renewed by one of those two companies. One of those two insurers said, not going to insure you anymore. They had no coverage. We just got them, a fairly competitive deal. The only, unfortunately, it was the only thing that they could find in the marketplace because they didn't have insurance. But psychedelics, we're learning about that and educating the insurance companies. And that's part of what we have to do in these tough sectors is we're learning ourselves. We got to educate the underwriters. We've actually gotten insurance companies that have never touched cannabis before to get involved in cannabis, to dip their toe in. And then within a couple of months, they were competing for business. They got hungry and excited. They were competing for business. So that was through a process of educating, getting them to know some of our CSE clients, getting them comfortable that these are real people with good business plans. There's a huge market. There's huge potential. They want to invest. They're going to invest, and they're investing their risk capital. The underwriters kind of see it as they have risk capital to invest to protect the balance sheet for your issuers, and that's how they're investing.
So you guys are really working as an advocate for public issuers and helping them kind of fulfill that. When you get insurance as a public company, is that disclosed to your shareholders that you have that insurance?
Often it can be on the management information circular. It often is. And so we sometimes review those for clients or for other companies, and we do some benchmarking with that data. Not every company does disclose it, but it is often disclosed that we have a full insurance program that covers many of our risks direct, and then they'll sometimes specifically say directors and officers limit of $5 million, and sometimes even the premium. So yeah, we review a lot of those filings.
Because I would imagine as an investor, if I saw that a company had implemented some insurance, to me that would say the officers and directors of this company are implementing a proper corporate governance, package within their corporate structure. And I would appreciate that companies are, being mindful of how they need to protect themselves and disclose to their shareholders. And, it really is such an odd time. And I think the one thing that surprised all of us at the CSE over the past few months is how busy we remain to be, how much trading and volume and companies coming to market is still happening. I don't know if we anticipated it to go that way. But being that there's such uncertain times and, things are happening in other jurisdictions that we don't have control over, and, sectors are being regulated by other jurisdictions, such as cannabis in the US or whatnot. I think this is a time where everyone needs to instill some kind of insurability into their practices as public companies. You brought up a few times kind of the tech and crypto and blockchain space and esports. How is this different from, you don't have to compare it to cannabis, but how is this different for those technology companies?
No, that's a really, really good question. Operationally, of course, there's a lot of differences. But from a board and governance perspective, there's a number of similarities. From an insurance perspective, probably the biggest theme that we see from being active in all these areas is these are new industries. Not a lot of data, not a lot of actuarial information for the underwriters to rely on. So underwriters are concerned. They don't understand. They don't understand the product. They may not understand the cannabis product. They may or may not understand, what's a cryptocurrency. I know some underwriters that are big time investors in cryptocurrencies. They're passionate, but most aren't knowledgeable or passionate. There's that. There's also some reputational issues because cannabis has a reputation of being an illegal drug. Some underwriters don't yet know that these are legitimate businesses, or some underwriters have some concerns, let's say, left over because underwriters are conservative by nature, and they're still somewhat like, oh, reputational concern is critical. What will our shareholders think if we get active in cannabis? And many insurers are very concerned about being afoul of US federal law, or even the perception of being anywhere near crossing the legal threshold with US federal law. On the cryptocurrency side again, and blockchain, something they don't understand. The principles are pretty basic. The principles are kind of simple, but the technology and the details are new and not readily understood. It takes education. It's something where in all these industries, first the underwriter, the insurance company, needs to understand the business. They can touch a car. They've driven a car. They've eaten canned soup. They get it. Then once you understand the product, they can understand the risks and start getting them understanding the risks. Once they understand the risks of a car, what could go wrong with driving a car, then they can insure it. But in cryptocurrencies still, or blockchain and a lot of the psychedelics and some of these other new markets, they don't even understand the product, so they don't understand the risks. We're struggling. We're trying to understand some of these risks. We're working hard to do that, and we're working hard to educate the underwriters. But we're still at that sort of educational game. We've had success. So like I mentioned, we had a couple of great calls back in 2018 with one of the CSE issuers, a Canadian-based US multi-state cannabis operator. We had a couple calls with a European insurance company. They talked to the board. They talked to the general counsel. They got comfortable. They got comfortable pretty fast. So that process of education we want to bring into psychedelics and into esports and other technology sectors as well.
Well, it's interesting you bring that up about, kind of a knowledge around the sector. So we just completed at the CSE a full initiative on investing in psychedelics. I learned so much because I really, myself, I didn't know much about the space. I was quite blown away about what is out there, and really encouraging, the retail market, do your due diligence on a sector before you dive in. Let me ask you this, just out of curiosity, and I think this would pertain to both cannabis and to, cryptocurrency is, does insurance struggle with these? I know cannabis down in the US, there's no real official banking platform for it. Does insurance struggle? And crypto is obviously cryptocurrencies. Are those areas that they struggle, because the transfer of capital is not as direct as other sectors?
The banking is a huge problem, but I think the main area where it affects our life with our cross-border clients and dealing with our cross-border business partners, it's in cannabis. It's in cannabis. We haven't seen any problems with payment, but what the problem is right now, most of the insurance companies, or almost all of the insurance companies that are operating in the US in cannabis, are doing it state by state. So each state is its own silo. So and we have multi-state clients that have 45 bank accounts. They're in eight or nine states. They got 45 bank accounts. They got 45 insurance policies. They have 3 or 4 or 5 different policies in every state. It's like a full-time job, or at least a part-time job, just to keep track of that. It's the worst. And we actually have a solution with our US partner. We have solutions to help alleviate that. And we just helped one of our US clients on the operational side, not directors and officers, but we helped them reduce their property and liability insurance rates by 70% by, for the first time, leveraging their multi-state portfolio and creating a multi-state, one comprehensive insurance package with significantly better coverage for products, liability, and loss of profits. They got crop coverage for the first time, and at 70% reduced rates, because we enabled them to leverage their economies of scale across different states. But it wasn't easy, and it's a real challenge because of US banking.
Well, and I think that's a really, really important takeaway, is that, these small cap companies, not all of them are revenue generating. Even if they were, these smaller cap companies, especially when they're going out and raising capital, and we take that same approach as an exchange. We don't want investors writing checks that are all just going to the exchange. We want these companies to be able to build and grow and spend their capital, in growing their business. And it sounds to me like insurance is, it's important for these companies to implement that safeguard, but they shouldn't have to be spending a huge portion of their treasury on that protection. We want them to spend the money on growing their business, right? So what you guys are doing, it seems like, is of huge value to them. Just to take a step back for a second, can you just explain clearly what is directors and officers insurance? So we've kind of touched on it, but what is it?
Yeah, so it's an insurance policy. It's a policy that covers and protects you for your legal liabilities for the directors and officers related to their capacity, serving in that capacity as a director and officer. It covers your legal liability, so that would be your defense costs as well as a potential judgment or settlement. And it also covers the public corporation corporately for in the event of a securities claim or securities class action claim. So it covers both the corporate entity from a securities class action or securities claim lawsuit perspective, and the directors and officers from a broader perspective for kind of a much wider variety of types of litigation against individual directors and officers, including statutory liabilities and potential allegations related to employment, discrimination or wrongful termination, those kind of employment lawsuits personally against those allegations personally. So that's the type of insurance. Most of the public boards that we talk to, have the coverage. Though now, to your point just a minute ago about not wanting to spend all your income or investment on insurance, it's getting really difficult right now, especially for those industries that we talked about today, like cannabis and tech, crypto, where those industries are so new. Insurance rates are really high.
Right. And that's the traditional platform for insurance companies, right? If there's more risk, the premium.
Exactly. But it's a growth stage, so the money is not there. So they're in some cases there's operations like in cannabis, there might be revenues, but it's relative to a big cap company.
Yeah.
The rates for cannabis and blockchain and crypto and these things are high. Psychedelics, those rates are high. The revenues are not high compared to the big caps. So it's a real tight squeeze. One of the most valuable thing we sometimes can do is empathize and understand and appreciate the squeeze that our clients and our friends, these are our friends, people we have dinner and lunch with and talk to, and they're our clients, and they're under a real tight squeeze. To empathize first, and then that's a good word, we advocate. We do everything we can to find them, options, to get them the best kind of coverage options we can, and then let them choose. But we get them a broad range of quality options.
So to kind of wrap up this, there's so much information. I feel like you and I could talk forever. But what, kind of as a final point, what is your advice to a public company in the small to mid-cap space right now under these conditions that we're living in and maybe difficulty in raising capital? What's your big advice for people? Other than calling you?
Yeah, that's a very good question. Yeah, that's a very good question. And especially because, and the reason that this podcast the idea that sparked it was these two major insurers that are big players probably for CSE issuers. They both pulled out of these innovative new sectors. So the biggest piece of advice is kind of be aware that it's a really difficult market. There's fewer insurers now than there were, 5 months ago. This probably directors and officers and governance related issues and insurance isn't something you should probably look at just a month before the renewal or 2 months before the renewal, or when your broker calls you to remind you about the renewal. It's something that should be, that because of the cost and because of the trends in the market, keep it in the back of your mind, start thinking about it early on. And you probably want to talk to a broker who understands and is willing to understand your sector, explain the sector and the risks to the underwriters, and a broker who understands the right markets, because there's 50 insurance companies that do directors and officers in Canada. There are maybe 5 that are active in any one of these sectors.
Wow.
That we're talking about today.
That's a small marketplace.
And it's probably less than 5. And in some cases it's 2. And in some cases it's 1. And then in the U.S. now, if you're U.S., there's a larger there's larger options. But for US cannabis, there's slightly more than a handful of insurers doing directors and officers. So it's real limited marketplace. It's a brokerage that understands your risk, your industry, can explain it, and is conversant, and has the relationship with the small number of insurance companies to maximize their help and support for your board.
Well, that's great advice. And, I encourage any company out there, hopefully you don't mind getting a few phone calls, but I encourage our issuers to call you and just find out what their options are, what the cost is. We were talking about this earlier, and I was surprised, Mert, to hear that I looked into officers and directors insurance back in 2012 for a small exploration company. And I was surprised to hear that it sounds like rates have actually gone down since then. So I'm happy to hear that things have become more reasonable, because we want people to protect themselves. And we want this industry to thrive. We want people to be protected. We want things to go well. So I'm happy to hear that opportunity is there. So thank you for the work that you guys are doing. I encourage our issuers to call you and find out whatever they need to find out about implementing that into their corporate governance practices. So thank you again, Mert.
Thanks, Anna. We love the CSE, and the people and your entrepreneurial drive and innovation is something that I personally love and aspire to and try to base my practice on as well.
Well, I feel the same way about the CSE. So, and we love working with groups that are like-minded. So thank you again for everything.
Thanks a lot, Anna.